Hi everyone. Today I just want to go over a couple of key metrics starting with US confidence and see where they might be pointing to for markets over the next week to couple months. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So quick take at US confidence, we said it is waning. It's been going down a little bit here. Business confidence fell to 102.8. You can see here it got as high as like the 110 area. And we're also seeing the Michigan consumer sentiment also declining, not so strong on the optimism. What does that mean for the US economy? It means exuberance around the US president's policy changes, Trump's changes might be waning here just a little bit. Definitely a little concern for some of these rapid fire changes and what they might mean for the broader economy. Do I think they're going to be negative? Not necessarily, but there's definitely uncertainty, and when there is uncertainty, that does tend to put a little bit of a shock into the stock market because people just don't know exactly how it's going to affect everything. We're also getting a little bit more cautious stance from the Fed. They're not sure exactly what the moves are going to mean for the economy yet either. We're starting to see some more aggressive layoffs. Is that going to push unemployment higher? Does that mean we're going to see a little bit more rate cuts? We also saw a little bit of a jump on the interest rates. So does that put the Fed in a tight spot where we can't see any more rate cuts, but also unemployment is rising? Is that the case? If it is, obviously, that is not going to be so good for the soft landing or the reacceleration of the economy, which generally leads to cheaper prices in the stock market at some point in the future. Obviously, this is a macro take, but something to keep in mind in the back of your head. And the other thing I wanted to mention was the Trump tariff memo raising the stakes for global trade. You can see these reciprocal tariffs, these China tariffs here at around 10%, EU VAT tax somewhere in here, non-tariff barrier up in that 10 to 12% range. But what does this all mean? Basically, it means that the US has a lot of dominance over these other countries, and we're starting to reassert that at least a little bit, focusing on China, France, Canada, among others, underscoring that US economic power to recalibrate the global trade dynamics, because there has been at least perceived trade imbalances over the medium to long term, and that is something Trump is trying to address quite aggressively, which has signaled a little bit of volatility in and around that tariff move. Only one of those tariffs has gone into effect, but it is something to pay attention to, and the market seems to care about these tariffs quite a bit. Once those first ones were announced, markets did react pretty strongly, and then once they were kind of lifted and Mexico and Canada did kind of do what we wanted them to, then they were lifted and markets rallied on the back of that news. So pretty sensitive to the tariff argument right now. Again, another thing that's pretty macro, kind of hard to time, but it's definitely uncertain and something to keep in mind, especially as this news continues to roll off. I don't think Trump is slowing down anywhere when it comes to at least threatening these tariffs, and he has absolutely indicated that he's willing to go through with them. Moving over to fear and greed, we finished at a 44, down from a 46 on the previous Thursday, and then a week ago we were actually at a 38. So we did see a little bit of an uptick over the course of the week. You can see it slowly grinding higher. Honestly, I thought it would look a little stronger considering how strong markets looked at the end of the week, but the metrics are just not going with it. Momentum is neutral, strength continues to grind higher, but still in fear. Breadth has actually pulled back a little bit, sitting in fear there. Put call ratio, regular greed, volatility, neutral at best. Safe haven demand did pull back a little bit with the selling there. Bonds did better going into the weekend, so fear on that metric. And then junk bonds still sitting in greed. It chopped around a little bit during the week, but back into regular greed. Bonds are continuing to be an opportunity in my opinion, and that's why that metric continues to look so good. Moving over to the AAII survey, you can see the bulls getting squeezed way down. Really low metric there at a 28.4. Bears all the way at a 47.3. This is when you start to get into that contrarian metric area. So when the bulls are so low and the bears are so high at a 47, you can see that is your 1 year high there, 47.3. To me, honestly, I want to go contrarian on this, right? So you start to see really low numbers on the bull side. That generally wants to put me more on the bull side of the markets. Can we get that kind of rocket ship higher? Potentially. We've kind of culminated this 4-week move to the downside on sentiment. We'll see if this follows through and continues to look really bearish next week, but honestly, I would guess that it probably will not, or at worst, we kind of get some sideways choppy action. And then looking at seasonality here, you can see supposed to be pretty bearish going into the last 2 weeks of February. Historically, it's quite bearish. Doesn't matter if it's post-election or not. Generally, down and to the right here for the end of the month, with the NASDAQ being the worst performer, down approximately 3%. We'll see if that follows through or not. The end of the week was really bullish. We closed right on the highs. We're at a key resistance area. Is it going to reject and sell? Certainly a potential for that. And then looking at the calendar here, you can see President's Day closed for the Monday, but President's Day week up 7 of the last 12, not a terrible metric. First day of options expiration, 21 of the last 13, a relatively bullish stat there for the Tuesday, but then you have Thursday, Friday bearishness. This is your third week options expiration, so expecting it to be relatively bearish headed into that. Down 14 of the last 21 for expiration day, so keep that in mind as we head into the end of the week. In terms of data, housing index, Fed minutes there on the Wednesday. Leading indicators on Thursday, a little bit of economic data, Philly Fed manufacturing, and then existing home sales, Michigan consumer sentiment. Not a whole lot of data this week, but just keep in mind that seasonality as we head into options expiration. Moving over to earnings, there is still a little bit of earnings left. You got Medtronic in there, Occidental Petroleum, fairly interesting. Garmin here for the Wednesday. Walmart, big one there for the Thursday. You got Booking.com as well in there. Vici Properties for you real estate guys. That's a Las Vegas-based real estate company. That'll pretty much wrap it up for the week. I think the only one still hanging out there for 2 weeks from now is NVIDIA. And then moving over to Max Pain. Max Pain is all the way down at 598, so expecting a bearish move. Fits with the overall seasonality. You can see it's down about 2% from current price. Total options, 2.7 million. Not a lot actually for a third week options expiration. Put call ratio relatively high, 3.5. In terms of levels, 600 is your first put wall, so plenty of room to the downside before we really start to hit any of those puts. 600 to 605 makes sense. Call walls here 610, so not expecting to go any higher this week. Expecting this to dip closer to 605, maybe even a little bit lower. Overall, 2% down move at most makes sense, but a percent and a half would absolutely be within the normal range. And then moving over here to the SPX, you can see we were up 1.47% right at the all-time highs. We did get a step back to bullish on momentum. Interesting. So if we get the follow through on that, your next resistance is going to be the trend up here at 62.27, somewhere in there. We're going to get the continuation, or is it going to reject back down to the 21 EMA? That would be interesting. Technically, we closed above the level there. And then looking at the RSI here, you can see just barely above it. Last time we touched it, it did reject from there. So we'll see if that follows through. The volume was pretty decent on the up move. Overall, not terrible for sure. It looks like it could go either way. Key resistance zone for sure, but overall the metric looks relatively bullish. And then looking at trend support here, you could see that would be around 59.90. That makes sense. If we reject here, push down to 59.90 as your support, but you do have a little bit of trend support here at 61.05, 61.06, somewhere in there. If it holds the level and continues something like this, where you get a sideways choppy candle, then you get the retracement, then potential for continuation up to these trends here. That medium-term target, if we did get the upward continuation, would be about 46.24. Certainly possible that we do. This held in really well for the week. I was expecting a bit of a bigger sell with a clean double top here, which is still in play, but this week did look a little bit more bullish. And then you can see what that looked like here on the daily chart. So we got above the trend, we held the trend here. Is it going to pull back to that 55 EMA that's been support? That's around the 6,000 level, 6,008, somewhere in there. And then that trend support in here around 59.96 like we talked about. And then looking at that SPY chart, we had that zone of resistance. We talked about it. We closed right at it. We touched it, could not get above it there on the daily chart. Current support 607.03. And then we went ahead and added a level here from the top of that Friday the 24th candle. That is at 610.78. We touched that level and then rejected from there. That was very, very close to the high of day from the Friday session. Is this the double top? Still remains to be seen. We did show at least a little bit of rejection from there. Moving over to the Tasty charts here, this does look relatively bullish. You got a couple of bull candles here. Is it going to hold on the weekly? We touched that 8 EMA, got back above it, held that on the close, and then rallied through to the end of the week. So want to see if it can continue through here. Second ATR band right now, 517.58. That would be your upper limit if we could get there. I don't think we're going to get there because of what we saw in the Max Pain numbers, but if it were, that would be your upward target. And then you have the midpoint, which would be your low of the range. In my opinion, that would be 591.86 if we did get anywhere near that low. Again, not really thinking we will, but that would be the low range. 8 EMA, 653, I think we'll probably pull back to that zone. And then we'll see if it holds. Are we going to hang in that zone for the end of the week? Maybe potentially get a break there. Volume weighted MACD has continued to show bearish. We've had 3 weeks of bearishness, even with the up move. Definitely divergence there. Is it always a great metric? No, not always. You can see here we had bearish MACD, bullish candles, and then it ended up following through with bearish MACD here on the volume weighted MACD. So It's not always great, but it's something to keep in the back of your mind. The volume has not gone with price here as we've continued to rally. Moving over to the NASDAQ, this looks a lot stronger. We've continued to kind of uptrend here. We're right at the highs from that 16 December week. Are we going to get above that? That high is 22,133.22, and the current high is 22,139.43. So we did get above that level just by a tiny amount. Is it going to hold? Is it going to continue up to the trend here? Certainly a possibility. It does look relatively bullish coming off that week. That's going to put you to the 23,200 area. Momentum stepping back to bullish after 2 weeks of down move. RSI back to bullish. It's been really choppy in here, but the NASDAQ honestly looks really good here. I do like the way that it's set up. And then just looking at that a little closer here, you can see it's right at that critical level. If it gets the continuation, and we did close right on the high, which is definitely a bullish level, are we going to continue in price discovery? It's certainly a possibility. Everything to me says that it should potentially go a little bit stronger to the upside. And you can see what that looks like here on the daily chart as well. Right at that level here. Trend up here. Is it going to continue into that area? 22,580, somewhere in there. And then looking at it here on the daily chart, the Qs, the 538.28 level is the level. We close below it just by a little bit. If we can get above it, price discovery, continue up potentially. And then just extending out that trend line here to see where we would potentially be going in the short term. That would take you to 543.13, about another 1% potential from the current level to that next upper trend, which seems absolutely within play. Maybe we touch that level on the Monday, get a quick rejection, show that bearishness into the end of the week. That would take you into a pretty extended area off of the EMAs, which are generally between that 520 and 530 area. Moving over to the NASDAQ here on the Tasty charts, you can see touch that 8 EMA briefly, continued higher, second ATR band, your target at 546 on the weekly chart. That'll be just a smidgen higher for the next follow-on week, but think we could get there potentially as high as 550. That would be a really strong push. That would probably be as high as I would expect. Occasionally you can get to that upper band. That's currently sitting at the 529, 563 area. I don't think we're going to get that high, but it's not impossible. You've seen strong candles like that here where you get a continuation to this zone, really strong candle, almost to the next zone, consolidate for the next couple of weeks of bullishness before you get the pullback here. Seems like a similar setup to that, but we'll see. Right now it does look pretty bullish for me though. And then looking at that daily chart, you can see we did get above that ATR trailing stop. So you're technically back in bullish conditions. Trailing stop now is at 515.59, bullish conditions there. Looking for the upper band on the daily chart, that would take you to that 549.16 area, which fits generally with that 550 that we just talked about on the previous Tasty charts. So over on the trading view charts. So overall bullish. Is it going to break this critical level? We're going to find out. Moving over to the Russell here on the weekly chart, it was basically flat. So 0.03 to the downside, just 3 pennies there, or 0.01%. Touched the trend, bounced, finished unchanged. We've been basically unchanged for 3 weeks in a row. Continuing to watch this zone here. So far, trend holds. Trend support is 222.50. Trend resistance up here around 232.75, 232.50, somewhere in there. Could go either direction. Right now, we're stuck in this same zone. We've really been here for basically 2 months, mid-December here, still here mid-February. So we'll see. Right now, I would say neutral, maybe a little bit bearish, but neutral here on the Russell. And then looking at that daily chart, you can see this big consolidation. 55 EMA continues to be resistance there. That is at 228.44. And then you got the 144 EMA continues to be support at 222.97. Mid-range here, 226.02. That's what we're looking for. Looking to hold this zone. Momentum flat, RSI flat. So overall neutral still here on the Russell. Could go either way, really no structure in either direction. Moving over to the Dow finished relatively unchanged. 0.6 to the upside, I guess a little bit more than unchanged. You can see gap up, but then once we got here, we gapped and dojied. So once we got to it, the open was 445.82, the close was 445.79. So just a 3 cents variation from open to close. It was the gap to the level and then doji. Momentum neutral here. It's been stepping to bullish, but just can't seem to get through this kind of all-time high area, which right now is 450.36. The high of the week was 448.04. So we're not going higher, we're not going lower. So similar thesis to the Russell for me. Neutral support is 445.16, and you could work off of that 27 January week, the 450.36 level as your high. If we get into that range, probably sell it. If we find support in here, 441.43 was your support for this week, so seems like an opportunity. Still well above all the EMAs, so still bullish conditions for me, but continues to look like a double top is forming at these key levels. Moving over to the equal weighted S&P, similar thesis to the Dow, gapped up and dojied relatively unchanged after the gap up about 0.5%, still in the same trading range we've been in. We've been stuck between 179.94 and 182.22 for a while. We got into this zone back here mid-January, touched the upper range twice in a row here, and then rejected, pulled back, ended up closing back above 179.94, and then we touched both sides of the range here this week, held the trend. For me, this is kind of a pullback, shallow pullback, continuation potentially. If we can get back above 182.22, I'd be looking for 184.84, or potentially as high as that next level. If you did get the breakout, the next level there would be 188.16, which is your all-time high here for the equal weights. Either way though, right now you have a high, lower high setup, and you would expect 182.22 to hold in my opinion. Moving over to the ratios, SPY Russell and NASDAQ SPY. The SPY outperformed the Russell and the NASDAQ outperformed the SPY by quite a lot here. You can see 1.41% on this metric. Huge NASDAQ outperformance, continues to look really, really good here. We had an up week the previous week, and then this week, very, very strong, looking for 366 again. So I think the NASDAQ is probably going to be one of the better performers here. And then you got the SPY Russell, got back above 266. We're right at the trend here. Is it going to reject? Who knows? But right now, momentum bullish, RSI bullish. NASDAQ looks like the best, followed by the SPY, followed by the Russell. Moving over to the Mag 7. The Mag 7 actually had a really good week here, 1.78% to the upside. We're back into the kind of highs of this trading range, really being led by NVIDIA and Meta. Meta's been the top performer here for a couple of weeks, really 4 weeks in a row. Meta's been very, very strong. We'll see if that can continue. Obviously not indefinitely, but it continues to look really good. The momentum continues to fade. Our side not really going higher. We're still consolidating, but pretty decent close. Wouldn't shock me to see at least a little bit of an upswing, something like here where you close at this level, throw a wick to the upside. If we can get to these upper levels, that's much, much higher than here. I don't really think we're going to do that. I still think we're going to kind of consolidate here for a little bit longer, but strong candle, continues to hold within this range. Moving over to Apple and Microsoft. Apple had a massive week, 7.5% almost to the upside. Really, really strong. Came off these levels here. We showed consolidation, and what a rocket ship. Pushing very, very close to these trends here around the 250 area. That would be your short-term target. The all-time high is 260. Can we get there? Who knows? But either way, this looked really strong for Apple this week, and then you got Microsoft down 0.33%. I still think this is going to fade here to the 394 level before we go anywhere else. You do have some levels in here that kind of make sense around the 400 level, but momentum bearish, RSI bearish. I would stay away from Microsoft for now. But Apple continues to look really, really good, and I would participate in Apple, especially if I had to pick between these two. Apple looks much better. Moving over to Tesla and NVIDIA. Tesla was down 1.6%. It was down much, much more, hit the trend, and then bounced, and now you got support at 355.03. It was fading a little after hours. I would be patient here. Structurally doesn't look good. Your trend support is here to 329.76, somewhere in there. I wouldn't buy anything before there. And then you got NVIDIA, really nice week, nearly 7%, 130 level break, headed towards the 140.76 level. It's back above all the EMAs and SMAs, momentum relatively bullish. Looks like a pullback in time here. Can it break out and go to new all-time highs? Certainly a possibility. I don't think that's going to happen until we do get the NVIDIA earnings, but I don't think we're going to break down before that either. I would expect to kind of see a chop sideways within this range until we get the NVIDIA earnings in about a week and a half. Moving over to Meta and Broadcom here just for a moment. Meta was up 3.1%. You can see 4 weeks in a row of straight bullish price action, and before that it was really closer to 8 weeks in a row. You had one very shallow pullback, and then we continued to rocket higher towards this trend around the 768, 770 area, probably going to get there. And then you can see Broadcom, positive week, 3.6%. We're still in the same trading range we've been in post earnings. Probably wouldn't do anything with Broadcom, but Meta continues to be a rocket ship and continues up seemingly every single day. Moving over to staples and discretionary. Staples up 1.59%. Discretionaries up just 0.63%. So we did have a little bit of a pullback at the end of the week for staples, but overall staples continues to look really, really good coming off of this low here. Is it going to be a lower high again? Hard to say. Either way, though, this has been a really strong push to the upside. Momentum swinging to bullish. RSI back above the SMA. Good volume on the week. Seems like staples is still the place to be. And for me, it still says risk off market, which is definitely concerning. You got a new relative low here on this wick for discretionaries. Is it going to take out this low here from the early January timeframe, 21 EMA is right there at 218.22, my level 215.06. Discretionaries just doesn't look good with the high, lower high setup, big wicks, continues to sell every time that we find any kind of strength, versus staples, which has continued to find bullishness over the last 6 weeks. Moving over to transports and communications, transports was up about 2%, continuing to look relatively strong despite the Dow not really moving, the Russell not really moving. Transports have held up really, really well. Then you can see communications here about 2.5% to the upside, new all-time high. This is really being driven by Meta, obviously momentum bullish RSI, super overbought, but communications, 5 weeks in a row of bullishness. Can it continue to do it here? Let's go ahead and extend out that trend line somewhere in here, which would give you a target around the 110, 111 area. So both of these look good. Got above 71.13. Is it going to head towards these highs here around 75.50? Either way, both of them look relatively bullish for me. And there are some strong sectors in markets, despite the kind of sideways choppy action we've seen outside of tech. Moving over to RIOT and Marathon. It's been a while since we talked about these, but they actually showed a little bit of strength this week. You can see RIOT up about 5%, held this kind of consolidation low. Are we going to get the continuation back to 14? Probably looks like we will. Like that as a zone of resistance here. You got the 200. If it can break through here, which it's been in this zone for a while, if it can break through this consolidation high, then you have 18.7 in play. And then looking at Mara, slightly positive 13 cents, but you can see a new relative low, found support there. Momentum still not great, RSI still not great, but if it can hold this low in here for a little bit, maybe consolidate, allow this momentum to step to flat, then maybe we see a bit of an upswing from this consolidation low. But in terms of a trading range, it's been here many, many times, and every time we see a spike somewhere into the 28 to 30 range. So are we going to get another iteration of that? Absolutely seems like a possibility. Moving over to Breadth. Breadth did not do super well on the 20-day, down 11.8%, but 50-day up 10.4%. So that's part of why we're seeing mixed markets. 50-day momentum continues to be bullish. 20-day momentum stepping down slightly, kind of neutral there on the level with the SMA on the RSI. And then you can see the trend here, finding support, consolidating. Is this going to be a higher low setup and push back into the 8s? We'll see. It's not impossible. Doesn't look like it on the momentum, but so far we've held this relative low for 2 weeks, so that's good. And like I said, the 50-day looks very, very good. Moving over to 200-day breadth, you can see this consolidation low. Nice little up push to that 58.50 level. We closed above it at 59.04, right at the 200 SMA at 59.18. Momentum continues to step to bullish. RSI getting above the SMA there, so that's a pretty good indicator if we're going to kind of get that continuation potentially up into the trend zone. Let's go ahead and extend that out. That would take us to the 65 area potentially. Everything looks pretty good for this to continue higher in my opinion, except for that 200 sitting as resistance at 59.18. The other good note here is that we're still hanging above that 50 level. Moving over to yields. Yields actually sold. We had a couple of hot CPI reports. Nobody cared about that. And then we did end up negative on the week. You can see 0.7% on the 2-year and 0.33 here on the 10-year. Continues to close lower. Is it going to head back down to the 4.35 area potentially? Momentum still bearish. RSI still bearish on both of these. Everything here says this should roll down just a little bit more. And as long as this continues to stay stable in this range, like we have been going all the way back to April of last year, kind of chopping in this range, that should be an overall bullish metric for equities. Moving over to the dollar. Dollar was down 1.21%. Momentum continues to fade, almost flipping to bearish here. I think this is going to continue a little bit more. RSI bearish as well, breaking down almost below the 50 line. Got the 21 as support at 106.2. We're below the level 106.8. So if you're trading this to the bear side, 106.84 is that level. If it continues to close below there, then you should be in bearish conditions. But if it does get back above there here the next week, then maybe we're going to see this kind of consolidate between 106.8 and that 109.5 level, which was the most recent high in this kind of trend consolidation area. Moving over to bonds. Bonds continue to hold up really, really well. We had some spikes down, and you can see it here on the chart. What a spike down. The low of the week was all the way down at 86.86. And then we finished all the way up at 89.16, just above the 89.15 level there. You can see momentum bullish, RSI continuing to swing to bullish. I still think this is going to go at least to the 21 EMA at 90.71. And then you can see high yields. This looks like a pretty clean bull flag, chopping sideways here if we can get above the 200. Then we're headed to 97.6, 97.7, and then potentially higher from there. If it does get higher, there's a lot of room for this to kind of push higher, potentially into the 101, 102 area. Either way, though, everything says pretty bullish for me Momentum stepping back to bullish, RSI back above the SMA. Everything says bonds look good, and I still think that's true. I've been saying it for a while. And then looking at the VIX here to finish up, you can see we're still right at that 14.7 level. We've had a lot of really big moves on the VIX, as high as 65.7, obviously way higher than you would expect in normal movement. But since then, we've remained elevated. We're nowhere near the kind of 11 to 12 range. We're staying elevated here. Is it going to bounce again from the 14.7 level? Are we at that double top range? Momentum, a little bit bearish, RSI bearish. If it breaks here, markets should go a little bit higher, but we are currently at support. Moving over to my accounts, I ended up around $700 on the week, I think, from the math that I did. So overall, pretty good week. Not as good as it could have been. The NASDAQ had a really strong week, up over 2%, so really strong there. I did outperform last week, underperformed a little bit this week, but either way, making money 2 weeks in a row. Finally getting into the green pretty solidly. You like to see it. If we get the breakout, absolutely going to have to adjust positions to that and position for that bigger up move. I certainly think it's in play, but if we reject from here, I definitely have a lot of protection. So I'm kind of more positioned for that protection style play to the downside if we reject from this kind of double top formation we have on the SPY charts as well as the NASDAQ. Key resistance levels as we head into the Tuesday trading session. And then the Russell here continues to kind of chop sideways, pretty neutral on that. 226 for a dollar credit, just collecting credit on that. Overall, not a bad position, just a little bit more defensive than I probably should be headed into the Tuesday considering how strong the NASDAQ closed. Let me know what you think about markets. Can they continue to stay strong despite confidence waning and the threat of tariffs and some uncertainty in markets? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.